Hey, Normal Heights friends of the 116, our little slice of the 116, and a beautiful little slice of the year. Happy holidays to you and yours. Hopefully you're enjoying this nice little respite, but we're still checking in. We got a little monthly update here for the Real Estate Cats. Jesse Ibanez, co-founder of the Greenhouse Group.
Yeah, and Jeremy over here.
We're on the real estate and mortgage side around the corner of Adams and 36th. Two big things to leave you with here for the end of the year. Number one is we asked for it and we got it. And number two is some predilections. Can I make up words here?
That seemed like a
predictions for 2025. And chief on that list, the beginning of 25. So it's actually a prediction.
Yeah, and a couple more interesting things that are happening in the market right now. Home builders are slowing down, and we're curious to know, is that a bad sign or maybe not so much? And the second thing is ADUs.
Yeah.
Get to use those and make them a lot easier now.
Okay, so gang, we've been asking for it all year long, maybe last 2 or 3 years long. Can we please get some more inventory?
Yeah.
The seller-sided balance finally now starting to come back. And I'll share these numbers with you here. You got to remember too, the stats that we purport here, they're always laggards, right? They're really drawing from things that happened 2-3 months ago, from decisions that happened sometimes 4, 5, 6 months ago. But it's the best that we got. And so as we round out the year here, looking at, we're up 46.2% from this time last year. Right. Yeah. So that's an important reflection, because these last 2 years, going back now almost 3, we've had this whole fiscal policy from the Fed making money expensive, trying to artificially tamp down the economy and the inflation. And of course, it shows up on big purchases. So finally starting to see almost double the amount of inventory from this time last year. Pending sales up almost 200%.
Wow.
Which is fantastic.
Yeah.
So inventory up 50%, pending sales up, dang, they're double. So closed sales up 60% as well. So across the board, all the activity up. Now, what's interesting though, is that the prices you'd think would be going down.
Right.
With all that, it's actually not the case. We actually eked out another couple percent in median price. But the one thing I think that's most interesting, and we've been talking about this as a harbinger perhaps, like to watch, if you're trying to look at this and watch this from a strategic perspective, is that days on market up also 35%. And the supply of inventory still trying to moderate itself. The county is actually up, but the 116 is down. So now what do you do with that, right? So it's like there's not enough homes in the 116 to allow for that pent up, 50% activity, 200% activity. We just don't have enough of it. So we asked for it, we got it, but we're already like running out of it as fast as it's actually coming.
Right.
So in 25, gang, let's hope that the rates, my man over here, he's the oracle of rates. Whatever he says goes.
Oh,
the Fed chairman actually listens to Jeremy, if you didn't know that. But if the rates continue to do their thing, which hopefully will be favorable, I'm hoping that you, future sellers, and you, future buyers, come to the 92116 party, because the prices are there. It's a nice little respite to grab something. And more importantly, we need you, because the demand's going to fly off the roof.
Yeah. I have something really cool to say about that. But before I get to that, are we not talking about the hats? I'm looking at you right now, and I'm those are all great points, but I'm barely able to take it seriously.
Is this not a Wednesday?
It's a hat day at the Greenhouse Group.
Ding.
So really interesting tie into that is home builders. So they've come out and the home builder starts are down. So what does that normally mean? Normally that means home builders are maybe expecting lower demand, or there's potential for them to say, hey, we're going to work with what we have right now. So a lot of people will look at this stat and say, oh, this is bad news, right? But home builders are just like anybody else. They're trying to predict the market and stay ahead of it, but they're also fixing their prices. Maybe not in a legal way, but follow me on this. If I'm a home builder, I don't want too much supply, because more supply means potentially lower prices. I want low supply, high demand for my product.
So they're curating it.
it could be the case. I doubt that anyone would ever admit that to be true. But the idea that they're necessarily slowing down starts doesn't necessarily mean that they're expecting lower demand. It could be a result of the cost of labor. It could be a result of the cost of materials, which a lot of people are expecting to continue to go up. So they may be looking at this and saying, just hold on, let's see how things go here through January and February before we get all of our stuff in a new bucket. So I think that's a really interesting economic data point that may or may not be super obvious as to what it's going to mean for the future.
And I think builders are in a unique position where they're always putting their thumb on the scale. They have to.
Yeah.
Because we're just dealing with the inventory that becomes available to us organically, like through the natural process of a seller saying yes or a buyer saying yes and making a marriage. But builders are actually contributing to, right? So you said, I don't think anybody would admit to it. I actually think that that's woven deeply into the ethos of the process. Yeah. So if you're saying that they're not building new stuff, which of the two things do you think is more true?
Yeah, well, I think what's clear is the outcome of it. So I was on the phone with a client just this week who was talking about the problematic situation of her trying to rent her new rental.
Yes.
And they're building right down the block new apartments. And that was actually having a negative impact on her in that she's competing against brand new construction. And sometimes the brand new construction, especially if it's apartments, they're going to try to get them on the books, get them for cheap. So they can actually impact at least a smaller, more micro environment when they're building. And so I think that the fact that they're not signing up for new inventory right now, they're not signing up for new home starts, probably is more indicative of the unforeseeable future of the next handful of months in terms of policy, in terms of product cost, and really interest rates. So all of these things are such a maybe right now. When you're a builder, you're not talking about buying or selling one home. You're talking about making an investment that is massive.
Yeah.
And if you get it wrong, it can cost a lot of money. So sometimes caution is just a sign of like, hey, we're not really sure where this is going. But it's good for individual homeowners because there's less competition out there for new properties.
Yeah.
Yeah.
But gang, you know, what's important, I think, is this is all nice little morsels of nuggets of cocktail conversations hopefully you'll have with you and yours over the holidays. But what's important is, how does this actually apply to you? And that's what we're here in the corner of Adams and 36 for. Your friends down here at the Greenhouse Group. We've got so many tools to help you as far upstream in this process as you can imagine, from home buyer classes to home seller classes and workshops, to rate watch stuff, to home value tracker. I mean, you name it. And we've got it curated for you down here at your Greenhouse Group. So from our family to yours, happy holidays. Looking forward to seeing you on the other side of the new year.